Good morning. Welcome to our E3 Weekly Market Report. I'm Pat McClatchy. Let's take a look at the exports that have just come out and see the reaction of the market. The cotton market saw a good number, 170,000 running bales. That's up noticeably from the previous week. That's up 59% over the 4-week average. Vietnam took 72,500 running bales. China took 20,500 running bales, and Pakistan took 18,300 running bales. Looking to see if we have any other numbers coming out here that no, new crops are very small. Okay, let's see the reaction. December cotton just before this report was up 63. Right now, December cotton is up 70, so we are starting to see this market move up. It already was up before these numbers came out. Let's look next at soybeans. Net sales of 660,700 metric tons. That's down 19% from the previous week, but up 13% over the 4-week average. Unknown destinations led the buying with 444,900 metric tons. Japan took 81,500 metric tons, and Thailand took 41,500 metric tons. Soybeans just before the report were down 5 1/4. Right now we have November soybeans down 6 1/2. So we've lost a little ground there. Let's go to corn. The corn number, net sales of 870,700 metric tons. That's down 4% from the previous week and down 32% over the 4-week average. We have Japan taking 232,400 metric tons. Mexico taking 162,400 metric tons. Venezuela taking 86,400 metric tons. And for corn, just before the report, December corn was down 3 1/4. Right now, December corn is down 4. So moving down slightly from this number. Going now to wheat, net sales of 462,700 metric tons. Primary destinations were the Philippines taking 124,400 metric tons, Venezuela taking 90,000 metric tons, and Indonesia taking 71,500 metric tons. Wheat just before the report was up 2. Right now, wheat is up 1. And as I look to see, now that we've got a couple of minutes that have gone by, more weakness showing up in corn. Corn down 4 1/2. Soybeans down 5 1/2. Cotton down 66. We really haven't had a reaction in cotton, not much. Perhaps it was we already were up going into this with some anticipation of it. We'll come back to that in just a moment. We'll just mention to you that our crop progress report came out Monday. No real surprises there. Everything actually is in pretty good shape. Let's take a look at what's happened here in recent history, what the markets have done, why they've done it, and what to expect now. Start off with cotton. Back on February the 29th, we made our low in December cotton at 54.19. Then here recently, the high was made on June the 17th at 66.64. That's a rally of 12.5 cents. The support in the market right now, according to talk among analysts, is their support in the area of 62.80 up to 63.25. There's resistance in the market at 67 to 68 cents. And later on, once the July goes off the board, if we start seeing some difficulties in weather in certain parts of the world, it's possible this market can move on up higher, maybe testing 70 to 72. Well, let's look at the support, or let's look at the reasons this market has moved up. Tight supplies for high-quality cotton. We're not talking about cotton sitting in warehouses in China. We're talking available cotton that mills can put their hands on. High quality is what they want. There's not an abundance of that. We've got a general bullishness in commodities in general, led by crude oil moving up, the dollar moving down. It's sort of the new reality of commodities and commodity traders. You have to look over your shoulder at a lot of different things that can affect your market. It's not about fundamentals anymore. It's not about just what's the weather look like in West Texas or in China or wherever cotton is grown. It's not about even supply and demand. That's certainly a large part of it, but you've got to consider other things. And along with that, what's been supportive and can continue to be supportive is money flowing in to commodities from around the world. Commodities are considered, or managed commodities, managed futures, are considered an asset class now, and very large money managers, people that move money around into different areas representing people trying to get the best return possible, are starting to see more money move into commodities. We saw this some years ago. It was a darling among some investors, and then it stopped, and we saw a withdrawal of that money. Now it's starting to come back again. Why is that? Well, since the first of the year, managed commodity markets, the commodity indexes, are up 13%, and you can't find any other major investment type that's probably up any. And they're looking at this. These large flows of money are starting to come into commodities, and my understanding is that that can continue, and that and once money comes into money managers' hands, that money, especially on sell-offs, will be moving into some of these markets, like we've seen recent sell-offs in grains. The cotton market, I also heard an analyst talk about the fact that cotton, if you look at long-term views of all commodities, cotton is on the lower end of its value in recent years. And so many managers look at cotton as an investment. We really have to think about that, because that's important to us now. As far as resistance goes for cotton, it's primarily China's cotton reserves. Anytime we have good rallies, we see more cotton being sold in China. So just be aware of the range. Support at 62.80 to 63.50 and resistance at 67 to 68. That's still what we're looking for as far as the trading range in cotton. All right, let's talk about soybeans. The low in soybeans was made in November beans on March the 2nd at 8.68. The high was then made not that long ago on June 13th. It got up to 11.86 and a quarter. That's a full rally in soybeans over that period of $3.18. Right now, looking at soybeans, the market is trading, November's trading at 11.08 and a half. Expect support in the area of 10.80. Expect resistance in the area of 11.80 up to possibly as high as $12. Corn, December corn, the low in December corn was made April 1st at 3.64. The high was made not long ago on the 17th of this month at 4.49 for a full rally of 85 cents in corn. The support for corn is somewhere, and right now December corn is trading at 3.99. Support ranges from $3.90 to $4. Resistance is anywhere from 4.25 to 4.45. Wheat in September, the low on March the 2nd was 4.60. The high was 5.33 and 3/4 made on June the 8th. But we've had a substantial sell-off in wheat here recently. And the wheat market right now in September wheat's at 4.72 and 3/4. The old low, remember, was 4.60. So we've almost completely erased that rally. And now we're looking at possible support down at the area of 4.60, which is not that far away. What are the reasons behind corn and beans? Why did we rally? Some of it's similar to cotton, but soybeans and corn were a little different. We've had weather. We've had a streak of dry weather in certain areas in the Midwest that have suffered. Also, outside markets like crude oil and the dollar, strengthen the dollar, weakness in the dollar, and strength in crude oil. And then we're looking at a tight supply and demand, a tight carryout for both of those markets. And so those are the reasons we've moved up. Recently, we had good weather in the Midwest and the market's back off. But there's probably some limitation to the downside from here, because you've still got to get through the most critical time in the growing of soybeans and corn, which is over a few weeks from now. Corn is pollination, soybeans is pod setting. So we really haven't faced that yet. And in a very tight carryout, in tight carryout years, the market's very, very sensitive to the upcoming period with regard to hot weather and dryness. Why did we recently see the recent sell-off? Improving weather, as I mentioned, and profit taking have driven this market lower. What happens now? Until we get past these key time periods, it's unlikely this market's going to be able to drop a lot more than we are right now. Speculative money is flowing into markets and commodities, and especially when a market's had a substantial sell-off, they consider that value, and you'll start seeing large purchases from funds on good sell-offs in these markets. So let's look one last time at the market. As we said, December cotton just before the exports came out, we're up 63. Right now, we seem to be getting a second wind. We're up 82. November soybeans just before the export report was down 5 1/4. Right now, we've got that market down 9 1/2. December corn was down 3 1/4 just before the export report. Right now, it's down 5 1/2, losing ground there. Wheat just before the report was up 2. Right now, it's up 1. So everything has softened some, with the exception of cotton. So that's it for today's report, our E3 Weekly Market Report. Have a good day, and we'll talk to you later. Thank you.